Welcome, tech aficionados, to the Monday edition of Tech Stocks Daily. We've got a sizzling lineup for you today. We'll unravel Apple's earnings anticipation amidst iPhone demand drama and international twists. Dive into Kyndryl Holdings' stock magic as they defy sector trends and gear up for an eye-popping earnings report. Then buckle up for CrowdStrike's fresh round of cybersecurity wizardry with their latest AI tools, the tech news equivalent of a blockbuster premiere. Plus, we'll chat about the buzz surrounding their stock performance and market position. Grab your coffee or your favorite gadget, and let's jump into this whirlwind of tech excitement together. All right, folks, buckle up for a juicy update on one of the most watched tech giants in the world, Apple. Today, Apple is at the center of the tech news whirlwind, and there's a lot of ground to cover. Let's dive in. First off, all eyes are on Apple's upcoming second quarter earnings report. And why is everyone watching so closely? Well, it's because of varying forecasts and sentiments from different analysts. JP Morgan analyst Samik Chatterjee took center stage by projecting an upbeat, better-than-feared outcome for Apple's Q2 results. The key drivers? A strong iPhone demand, despite the looming fears of tariff disruptions with China. Despite these tariff clouds, Chatterjee's betting on Apple's proven ability to weather economic tempests, thanks to their resilient earnings and stellar reputation in adapting during tough times. That's one to keep in the optimism vault, folks. Now, let's flip the analyst coin over. On the other side, we've got some skepticism in play. Enter Craig Moffett, who has cast doubt over Apple's strategy to potentially shift iPhone assembly to India to dodge the China tariff bullet. Moffett argues that the move might not be the golden ticket Apple hopes for in cost-saving measures, as the components are still predominantly made in China. It's a bit like saying, you can move me, but can you change what's inside? Turns out, India can handle half of the US iPhone demand, but with parts from China, it could be like having champagne taste, but sticking to a beer budget given the potential tariffs. Moffett hints at Apple facing headwinds from its position in China, especially with Chinese brands like Huawei grabbing market share. And just because we like to keep things transparent and current, Apple is under the microscope for its valuation edges. While it clocked impressive Q1 numbers, Apple's forlorn relation with Chinese manufacturers and some skeptics in the product innovation room has brought on concerns of a stretched valuation. Apple's expansion in AI offerings is a candle in the dark here, promising to inject excitement and volume into future PC shipments. Potentially a nice boost if you ask me. Rounding off this tech carnival are developments on the services side. They've recorded a near double-digit boost thanks to the swelling base of more than 1 billion paid subscribers across services like Apple TV Plus and Apple Arcade. Seems like Apple's not just making hardware fans happy, they're banking on the content crowd too. In summation, Apple's in a tug of war. You've got demand dynamism and subscriber spikes on one side, tangled up with tariffs and valuation trouble on the other. This week's launch into earnings is about as dramatic as the busiest soap opera. Tune in on Thursday to see whether Apple nails the escape from the crossfire of tariffs, or if it'll need a new playbook entirely. We've got all fingers crossed here at Tech News Central. Stay tuned for more updates, and enjoy the Apple roller coaster. All right, folks, let's dive into the world of stocks and tech. Today we're talking about Kyndryl Holdings, Inc., the IT infrastructure services company that was on a lot of people's minds in the financial markets. So here's the scoop. Kyndryl Holdings caught the eye of investors as its stock closed at $32.04, marking a slight dip of 0.03% in its latest trading session. Now you might think, meh, that's hardly any movement. It's true, the stock barely moved, but what's intriguing is how it compares to the broader market. While the S&P 500 saw a modest increase of 0.06%, and the Dow climbed by 0.28%, the tech-heavy NASDAQ slipped by 0.1%, making Kyndryl's static nature slightly more interesting than watching paint dry. Okay, maybe not that much more. Where the excitement really starts, though, is when we zoom out a bit. Over the past month, Kyndryl shares have risen by 2.33%, outpacing both the broader business services sector, which lost 4.91%, and the S&P 500, which saw a dip of 4.29%. Looks like Kyndryl is dancing to its own beat, and not too shabby, considering the competition. But why are people keeping such a close eye on Kyndryl? It's all about the anticipated earnings report expected on May 7, 2025. The company is projected to report an EPS of 52 cents. That's an eye-popping 5,300% increase from the same time last year. Imagine finding out your favorite ice cream flavor has gone from being extinct to having an entire aisle dedicated to it. On the flip side, revenue is predicted to see a modest decline of 1.9% from the prior year, now projected at $3.78 billion. Now the value hunters among you might appreciate the dish on Kyndryl, being quite the value stock. With a juicy Zacks rank number 2 and solid value metrics, it's priced reasonably compared to peers. Kyndryl boasts a forward PE ratio of 15.43 and a PG ratio of 3.09, which are favorable compared to certain competitors like Duolingo, which sits on much higher ratios. So why all the buzz about Kyndryl today? Beyond the usual stock movements and industry comparisons, Kyndryl's potential for growth with its upcoming earnings report, a solid value proposition, and comparative industry standing make it, dare I say, a bit of a unicorn in the realm of tech stocks. Just wait and see if it'll trot majestically or if its wings will just flap a little harder next month. All right, folks, let's dive into the thrilling world of cybersecurity with today's star of the show, CrowdStrike. This prominent player made headlines not once, but twice today. Let's break down what's happening in their fast-evolving landscape. Every tech enthusiast gaze turned to CrowdStrike for two big reasons. First up, their stock had a bit of a roller coaster ride. Despite the broader market seeing a generally positive day, with the S&P 500 and Dow inching upwards, CrowdStrike stock decided to take a brief dip by 0.42%, closing at 423.08 cents. That's right, while other major indices were in the green, the tech-heavy NASDAQ slipped a tad by 0.1%, which echoed into CrowdStrike's performance. But hold your horses, let's zoom out to the bigger picture. Over the past month, CrowdStrike has soared with an impressive 18.98% gain, outshining both the computer and technology sector and the S&P 500, despite all their losses. It's like watching the underdog suddenly become the top dog in a good old American comeback story, isn't it? And of course, there are the fine folks at Zacks throwing in their 2 cents with forecasts on earnings and revenues, which are quite the talk around the investing water cooler. We're looking at expected growth in revenue, but a potential drop in EPS. Their current Zacks rank, as fun as these rankings get, is a number 4 this time, leaning towards sell. But hey, numbers shift, sunsets, mice eat cheese, it's all part of the business. Now on to today's magnificent icing on the cake. CrowdStrike has unveiled their new AI-powered tools. Yes, indeed, we're talking about Charlotte AI, moving beyond the ask and respond strategy to fearless, autonomous reasoning. This upgrade sounds like something from a sci-fi movie. These innovative tools transform modern SOC operations, extending CrowdStrike's prowess beyond traditional boundaries to third-party data and attack surfaces long favored by those pesky cyber adversaries. Moreover, CrowdStrike's partnership with Google Cloud aims to beef up security for AI innovation. That's a cross-industry handshake right there, bringing together the best of endpoint protection and cloud security. Call it a Batman and Robin kind of duo, if you will. Currently, their stock is playing shy, reflecting a 1.8% downturn. With these new developments, it's going to be intriguing to watch what unfolds next. So what do you think, lovely listeners? Do you feel CrowdStrike's AI moves will transform the cybersecurity sector, or are the stock fluctuations a cause for concern for investors? Let's get this discussion rolling in the comments below. Don't hold back. Let's hear your thoughts, predictions, or any witty remarks you've got on CrowdStrike's latest endeavors. All right, tech enthusiasts, let's zero in on the spotlight, CrowdStrike. Given the dynamic update today, if you ask me whether to buy, sell, or hold, I'd lean towards holding for now, but let's break down why. First off, CrowdStrike is in an exciting position with its recent unveiling of AI-powered tools like Charlotte AI. These advancements position CrowdStrike strongly into the future, particularly in cybersecurity, where innovation is the name of the game. With partnerships like the one with Google Cloud also in the mix, they're not just building alone, they're teaming up with powerhouses to bolster cloud security. That's a knock-you-out combo if I ever saw one. But hold up, we've also got to consider the broader stock astrology. Despite exciting prospects, CrowdStrike's stock did take a slight downturn of 0.42% today. Coupled with suggestions of a possible EPS dip and its current Zacks rank of number 4 drifting towards sell. That could hint at potential short-term volatility or market apprehension, despite their vibrant growth narrative over the past month. And remember, tech stocks can be fiercer than an over-caffeinated tiger when it comes to moves, whether up or down. In simpler terms, if you're already riding the electric dragon of CrowdStrike stock, holding steady could be your best bet as they clearly fight to be at the forefront of cybersecurity technology. But if you're considering jumping on board fresh, keep an eye on market sentiment and those shiny earnings projections in the coming cycles. And remember, folks, this is just one reading of the market tarot, so always dive deeper, consult your financial guidebooks, and conduct your own thorough research before making any moves. Happy investing, and let's keep this hamster wheel turning towards more technological marvels. Today's tech market gave us a whirlwind of activity, from Apple balancing demand brilliance with tariff tension, to Kyndryl standing firm in a shaky broader market landscape, and CrowdStrike unveiling cutting-edge AI magic amidst a stock dip. Apple's earnings debate, Kyndryl's robust forward outlook, and CrowdStrike's AI leaps paint a diverse picture of where tech stands today, with plenty of suspense building for upcoming earnings. If you're itching for the latest tech drama and fireworks, you're in the right place. If you enjoyed this tech-packed roundup, go ahead and hit that like button, smash the subscribe bell, and share the tech love with fellow enthusiasts. And make sure to come back tomorrow for another action-packed episode of Tech Happenings.